Your indicators, and there are thousands of them, let's be honest, it can be overwhelming, but your indicators need to complement your trading style. It's just as easy to underanalyze a market as it is to overanalyze. I consider myself a smart money trader or a price action trader, but these indicators, and I'm going to go over in this video, pertain to every trading strategy out there because it's mostly about trading tops and bottom of ranges, buying where the smart money buys. In today's video, we're going to cover some of the indicators I use. Now, I like to use Lux Algo. It is a paid version, paid indicator, but I'm going to show you some free indicators that you can use to accomplish the same or a similar look and feel. The first indicator up is this 4 EMAs indicator. If you just type in 4 EMAs, it'll pop up right there. It gives you the 4 important ones: the 21, the 50, the 100, and the 200. So go ahead and throw that on there. When it's on there, you can change the colors to whatever you want, but this is my color pattern: 200 up top, 21 below, 100, and the 50 there as well. These are great indicators. We've gone over in previous videos what these are, so I'm not going to talk about what they are now. If you do not know what moving averages are, you should, and you should Google it and read all the Investopedia and all the articles out there. But this is key to any trading strategy. Just looking at simple moving average strategies, you can see right here when all the moving averages cross underneath this Bitcoin orange, which is a 200 moving average, that's a bearish sentiment. The price goes down. Simple trading strategy, right? Crosses underneath it, price goes down. It crosses above it, price goes up. All these moving averages cross above that Bitcoin orange, that 200 moving average, and price goes up. The next one that I'm going to have you throw on there is volume delta methods right there by Lux Algo. This is free. Favorite it, throw it onto your chart. And if you don't already, pull up the object tree right next to my right shoulder, right here. That is the object tree, right? Pull it up. If you need to get back to your watch list, it's in the top right-hand corner right here. Click that, click the object tree. That way we can turn off the EMAs. We want to just focus on the volume delta methods, right? So you can turn it on, turn it off, make sure to save often, but turn on the volume delta methods. So the volume delta methods is an amazing indicator because it's many indicators in one. The first thing you get is the CVD with this smooth out moving average right here. So this is the cumulative volume delta. Is the volume going up? And is it buy side or sell side heavy, or is it going down and it's obviously sell side heavy? But on top of that, you get this nifty volume indicator down below here. The nice thing about this is it's on the chart. Now, the difference between this volume indicator and the standard trading view volume indicator, which I just turned on down below here, or the VRVP, is it gives you the story behind the volume on every single candle. It tells you how much buying and selling pressure was in each candle. It gives you a nice smoothed out moving average of the volume, so you can see at quick glance, like here, for example, the volume's rising, so price should be acting accordingly, and it did, right? We got a nice pump to the top side there. Obviously, the red means it was a sell-heavy candle. When you see a bunch of those start building up, you know what's about to happen, and same thing with the green. But you can also see instances where it was kind of a slow build up, green, 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 and then pump to the top side. Top of that, this also helps you spot divergences, right? I mean, we can take a more extreme example of this. So let's go to the monthly chart, and we can see that top of the market where we had that kind of 62-ish K top and then that 69-ish K top. We saw a CVD divergence right there. On top of that, what else did we see? Well, we saw a CVD divergence here as well from this kind of, what was that, a 28K top-ish to a 31.8K top. So we saw a divergence from here to here as well. And that's kind of where we're at now with the dump that we're in. But it can help you on all time frames spot those divergences. But the beauty of this indicator is it's in TradingView. You don't need to go over to Kingfisher, even though you get a little bit more information over there, or some other site to find your divergences. your volume, your delta, and your CVD information. But let's just take, for example, here. We saw this move, so we saw a divergence from there to there. So we saw a divergence from this red candle to this red candle right there. All red all the way down, but we saw a divergence in a CVD. We also saw, even though the price was going down, green here, the volume was coming up, right? You saw the divergence. We knew that there was going to be a pump with a certain degree of certainty, right? But that's just how you would use this as a short, quick example. So to wrap up volume delta methods, I did change one setting here. So if you double click it, I did change it from intrabar buying selling pressure to intrabar polarity. For me, for my eyes, that's how I look at it. Now default, it comes like this, which is almost like an inverse, right? So it's an inverse. So the way I like to look at it is the intrabar polarity right here. You know, the indicator uses two different intrabar analysis methods for volume delta calculations: buying selling pressure of the intrabar, which is default, or polarity of the indicator. So the nice thing about any of these, specifically Lux Algo, is you can take it, you can Google it, volume delta methods chart, Lux Algo, exactly what it's called, and you can click on it and it'll walk you through. You need to be reading it. You need to read these and it'll explain the indicator for you. If you're just using indicators and you don't read what they are, I mean, this explains everything: absorption, exhaustion. You know, Google the indicators you're using and read up, because they're written. They write up what it is and how to use it on there. Like, I could do a whole video on this. That's not the point of this video, but I personally, for my trading style, like the intrabar polarity. It flows better. It matches. It's not an inverse of the price action. So that is the volume delta methods chart by Lux Algo. The next indicator we're going to talk about is Order Block Detector from Lux Algo. Favorite it, add it to your chart. This is another free indicator. So far, everything we've talked about is free. Make sure you're in your object tree. Make sure everything else is turned off, right? Hit the little eye there for visibility and only turn on the order block detector. Now, remember what I said opening the video, that you want to set up your indicators to complement and make your life easier when trading. You want your indicators to do as much work for you as possible. This specific indicator pulls out specific buying and selling order blocks, right? This is obviously a selling order block. If you reach up to it again, I'd probably be looking for a short. Or if we break through and go into this one, I'd be looking for a short. Same thing. That's my mentality if we got up to here. Now, if we get down into these order blocks below us, right? These are good long opportunities. Now, if you'll notice, it's not 100%. It didn't pull any order blocks for the buying side in our current range. Sometimes you have to draw them out yourself, right? Like, this is probably a good spot to take long positions. This is probably a good spot to take long positions. While it did some of the heavy lifting for me, it's not going to 100% do your job. You still do need to identify some buying and selling zones. Flipping it over to the 5-minute chart, you can see it did pull them below and above us. So it's going to change depending on what time frame you're on. And your trading style and strategy changes depending on what time frame you're on. So when I'm looking at the 5-minute, I'm looking to either just take an entry period for a longer time period or scalp. So obviously, if the price comes back down to these blues, I'm thinking possible long opportunity. If we get into the red, I'm thinking possible short opportunity. Again, no indicator is 100%. You can smash right through. We could smash right through on a high volatility, but you'll probably see that on other indicators. These are just here as reminders of what you should be thinking when you enter into these zones based on historical information and data. So this is a 5-minute chart. You want to go to the daily chart, you're going to see it look differently, right? Now, this is going to be pretty crappy because of this huge dump we had. So this specific red order block, I wouldn't even really pay attention to, right? I'd pay attention to this kind of inner one right here. And then obviously this one up here, and then it pulled the blue down here. So it's going to change and you can adjust them. You can draw your own. It's okay. but this just kind of lets you know what has happened in the past and what'll probably, remember, when we're trading, we're dealing in probabilities. That doesn't mean 100% of the time. That's why you use everything at your disposal to come up with a educated decision, educated guess. The reason it looks and you should act differently is because you're going to be in. If you're trading the daily chart, you have a day job 9 to 5, you should be trading daily and weekly charts. You shouldn't be trading a 5-minute chart. You should be waiting and taking your positions, your long positions down here, your short positions up here. And you're in these plays for days on end. Sometimes we're in that zone for a week or two, but that is why it's going to look differently, and you need to act accordingly depending on what time frame you're on. Now, what you can do is combine the time frames. So if you are trading multiple days or on the daily or even on the 4-hour time frame, you're still in it for a longer time period, right? You're not scalping 4-hour candles. You're in that for a while more often than not, right? Sometimes it plays out quickly, but other times it takes a while. But let's say you're coming down into this zone here, right? And you want to take an entry, you can then go to a smaller time frame. You know you're already in the zone and you want to take an entry. You can then zoom in. You know you're in the zone, right? Your blue zone on the bigger chart was like this big, right? You know you're in it. And then you can take entries based off of the order blocks on the smaller time frames for your larger time frame plays. And remember, Order Block Detector Lux Algo is what it's called. So let's type in Order Block Detector Lux Algo, Google it. They also have a video on it, but TradingView, read exactly what it is. It'll tell you and they'll walk you through. If you're not doing this, you're doing, I don't know what to tell you, you're doing it wrong. That's just like, being a lumberjack and they just hand you a chainsaw and you just go out there and you didn't read the manual. You didn't get shown how to do it. It's the same thing. You need to know your tools. And I mean, it worked out. It pulled the order block here, bounced up. It pulled the order block here, right? We came back to it even, and then it bounced up. It pulled the order block here. We might come back to it. It could get invalidated here, right? We could smash right through it and then bounce back off of this one and then come up. So just because there's an order block or some indicator is telling you something, it's still not 100% of the time. So far, we've gone over several indicators. You want to use them all, right? Volume delta, the EMAs, what are they doing? It looks like right now, all these moving averages are trying to come above, it's on just a 5-minute chart, mind you, the 200 moving average. So they haven't quite yet. We got a cross on the 21, excuse me. Volume's picking up, but it's starting to kind of get sell side heavy right now. The CVD is starting to kind of trend down a little bit. So maybe we do come back down and retest this order block. That doesn't mean it has to hold though. You need to use all the indicators at your disposal to make an educated decision. The next one I like to use is the VWAP. The TradingView default VWAP. Volume weighted average price. So just put it in VWAP, favorite it, throw it on the chart. In your object trees where you can just flip things on and off, and this is going to come in handy later. I'm going to show you, but let's turn it on and you can see the VWAP. So you don't need like a Cipher B, for example, to tell you what the charts are telling you. The nice thing about this is it's on the chart. VWAP is on the chart. So VWAP is this white line right here. You can tell VWAP is obviously coming down, sell side heavy, or VWAP is going up. And when price is above the VWAP, that's bullish. When price is below the VWAP, that's obviously a bearish signal. That's just one way to look at it. The other way to look at it is the line itself. When VWAP starts trending up like it did here, right, price is probably going to start moving up. When we're trending down like this, price is trending down like this. So this is the volume weighted average price. Now the default, when you throw this on, probably looked a little bit different than mine, right? I just took out the two top lines. You can keep them on, keep them off. Remember, everyone trades differently. Everyone looks at this stuff differently. So I liked to get rid of the upper band and the lower band and just had the VWAP, and I like it to be white. And you can make it skinny, you can make it fat, whatever you want to do. But, you know, you can adjust all this stuff, all the colors, the size of the lines to your liking. Which is an example. You can see the VWAP start to round and turn up and price is going up. We can see this start to kind of get that rounded top, price comes down, trading flat for a little while, and then that downturn happens on the VWAP, and we just tank. There are plenty of VWAP trading strategies. This is one of the strongest tools that you can use. I implore you to look into that, and not only look into that, but to read as much as you can. There's entire books written about VWAP. A good strategy for VWAP, you really want to use this on smaller time frames, because when you get to like daily time frame, it can look a little bit crazy on your chart. But if you go to like a 5-minute time frame, for example, you can see it looks different. So when we're underneath the VWAP, that's obviously a short. When we're above the VWAP, we're looking for longs, shorts, longs, shorts, longs. And sometimes we cross back below, we tap it. That's probably a good entry there. You want to look at other things too, and you short it. So this will help you get those sniper entries on larger time frame plays. If you're trading multiple days length on the daily time frame and you're going to zoom in, use the VWAP. Institutional traders use VWAP, so you should as well. For example, price comes down, retest this line, probably a good spot for a short, comes back up, retest it again, there's another good spot for a short, comes back up, retest it, pretty close to it again, good spot for a short. But any of those entries would have been great for you, and you would have been in the green. So that's VWAP. The next one we're gonna take a look at, you want to throw it on there. This is another Lux Algo one, supply and demand Lux. You can just type in Lux. Favorite it, put it on there. But it's supply and demand visible range Lux Algo, this top one right here. So again, we're in the object tree, turn everything else off because we want to do these one at a time. So supply and demand visible range, we're going to turn it on, and it's going to show you the supply level and the demand level in the visible range that you're looking at. So when we say trade the top and bottom ranges, right? Here's the bottom of the range, here's the top of the range. Now, this isn't 100%, right? Maybe you missed this one and you just have to wait. I mean, we're in the equilibrium point or the middle of the range right now. Not really the best time for a range, but you had your chance this morning, right? 7:30, 8 o'clock this morning. We were there. We were in this demand zone. And obviously, it played out right to the equilibrium. Maybe we come back down. Maybe you'll get another chance, or maybe we'll go back up to the supply zone. But keep in mind at the same time, during times of high volatility, high volume, we might blow through them. This works on any time frame. This is the 5-minute chart. It's going to look different on the 5-minute chart, just like all the other indicators, than it does on the 4-hour chart. You can see our demand zone, is way down here, and our supply zone is way up here. Where before, I think it was here and here, if I'm not mistaken. So depending on what time frame you're playing, it's going to look different. But you should also be aware of the supply and demand zones on every single time frame. The nice thing about this is it's automatic. It pulls them for you. Now you can find your own supply and demand zones, right? Like here's probably a good supply zone right there. There's probably a good demand zone right there, right? And you can even turn it red, which I like to do. I mean, I made a whole video on this, but this at least throws them on there so you can be aware of them quickly and find them to take entries or exits or shorts or longs. If you're looking to add to your spot bags, this is a great indicator. Again, supply and demand, visible range, Lux Algo. There it is, right? The write-up right on it on Trading View. It even gives you the threshold at, thinner and thicker areas of liquidity in that zone, which is this volume here. So obviously towards the top of the range, there's been more volume. We've been there more often. We've also been down to the bottom of this zone as well. Taking this back to the original intro to the video when I said use indicators to make your trading style easier, quicker, and do the work for you. This pulls those supply and demand levels in the visible range you're looking at on any time frame. When we say trade the ranges, you want to enter in off of supply and demand levels. You don't necessarily, unless you're seeing something else, right? But generally speaking, you want to enter when you're in the middle of a range. This is where the dumb money enters. Smart money enters at the top and the bottom of ranges. That is supply and demand visible range, another free. So far, everything's free that we've gone over. You don't need to pay for any of these. But supply and demand visible range, throw it on there. object tree, flip it on, and you can see here it automatically draws it for you. Now, input wise, you can do your deviation, you can set that to what you want, but it's a multiplier that affects how much the price should deviate from the previous pivot, or depth, which is how many candles it's going to use, right? So 20 is a default. I tend to like that. Sometimes I'm looking at larger time frames. I'll increase that a little bit, but you can see our fib levels here. It took it right from the top wick right to the bottom of the wick. You can see your golden pocket there, which I actually added in. So if you double click it, you're gonna want to turn on that 0.65. And I made them both kind of that Bitcoin gold or Bitcoin orange to signify the golden pocket right there. But between the 61.8 and 65% retracement level is the golden pocket. So remember, in a downturn, you're drawing your Fibonacci's from the top to the bottom, and an upturn from the bottom to the top, and you want to be exact. The nice thing about this is it pulls it automatically to the exact. So right now we're in a downturn, so an obvious level to look for a possible retracement, if we get it, we're starting to pump up right now, is this golden pocket right here. But just a great tool to have to add onto your chart. I do also believe I changed in, so I don't remember what it was default, but I extended it to the left and to the right, so it gives it to me on the whole chart here. But all these levels, you got to remember, the reason Fibonacci retracement works, right? A lot of people say it's hocus pocus magic, and a lot of traders say it's bullshit. I don't know where I fall on the spectrum. I'm probably somewhere in the middle, but it works because a lot of people use it, and psychologically, these are going to be support and resistance levels that you need to be aware of on the way up or down. And typically speaking, everyone's chasing that golden pocket, right? So logically, it makes sense that we go to that. Let's give you a higher time frame example. So let's go to the weekly time frame. Let's zoom out. So you can see from the bottom of the market, from this FTX crash, to the top of the market, that 31.8 up here. So you drop from the bottom to the top. A logical level of retracement right now, the golden pocket sits right into this range, which is about that $21,000 level. That is where a lot of traders right now are calling for the bottom. You can see how that aligns with the golden pocket in this case. But on top of that, you can see how these levels act as support and resistance. Right now, the 0.382 level is holding us. If you start to lose it, we look to the 0.5. Or if we go up to the 0.236 level, that might be a good spot to take a short, right, in anticipation of further downside. So the next one I'm going to talk about is a paid indicator. I'm going to talk about two paid indicators and then one final free indicator. So Lux Algo Price Action Concepts is an amazing indicator. It gives you so much in one. You need to invest in yourself. I get it. Maybe you don't have the money right now. Black Friday is coming up soon. What are we, a couple months away? Today, right? 25th? Yeah, we're 2 months away from Black Friday. Save up some money. It's not cheap, but it'll change your life. It really, really will. It pulls the premium zones, the discount zones, right? It pulls the order blocks, actual order blocks from the books. It pulls the equilibrium levels. It pulls fair value gaps for you. It shows you break of structures. Break of structures are a break of structure. So this big red candle broke this structure, but it's a break of structure signifies more down or upside, but in the same direction. Whereas a change of structure, like here, this choke right here, is like a break of structure, but a change of character of the market, meaning we're going up. Now I can do a whole video on Lux Algo Price Action Concepts. I'm not going to do that. They have a whole channel. Go watch their channel, right? I'm not going to do that. But to have these premium and discount zones and equilibriums and these order blocks from the actual order books and these break of structures, change of characters, the fair value gaps, to have all this in one indicator is simply amazing. There are indicators out there, VG, fair value gap, Lux, right? You can do it. I mean, they have it right here. Fair value gap sessions. You can throw that on. I need to upgrade, but I'm not going to. So you can make your own. You're probably going to run out, or you're going to need to make multiple indicator templates. So you can do fair value gaps, right? You can do break a structure, right? Lux, right here, market structure. So you can create this stuff on your own for free. Can we do premium and discount zones? Premium, discount, Lux, premium, Lux. Probably not, but premium discount somewhere else. Premium discount, that's locked. Premium discount input. Premium discount zone buy sell indicator. So there are indicators out here. I don't know how good these are. You need to spend money on yourself. And Lux, in my opinion, I'm not affiliated with them. I have no affiliate links. I don't give a shit if you use it or not. I'm just telling you from my trading strategy, it doesn't get better than Lux. Because with this, obviously, you're going to want to trade these premium and discount zones, right? So if we got up to the premium up here, you're going to want to look for a short. If we get to the equilibrium and we bounce to the downside, you're going to want to look for a short. If we get up and bounce to the, do like one of these, for example. So if we break up, bounce, you're probably looking for a long opportunity. I don't know why it's not pulling. Oh, it's just a big discount zone down here. But once you enter this discount zone, it's probably a good spot to look for a long opportunity. This is on the weekly chart, so it's going to look a little bit weird. If we scroll into the 4-hour chart, for example, you're going to see, again, it's going to look different. So our discount zone is right here. So if we get down here, we want to long it. If we get up into the premium, we want to short it. But you can also look at these order blocks for obvious short opportunities. This one's obviously an obvious short opportunity. This one was an obvious long opportunity. On top of that, you get access to all of their paid indicators. Now, one of my favorites, which has replaced Market Cipher B for me, is this Lux Algo Oscillator Matrix. So it has your money flow, your momentum waves. It shows divergences for you. And then I got VWAP on the chart here. So it shows bullish divergence here, which obviously played out price-wise. Bearish divergence, from here to here, which played out. But great indicator. It shows you your money flow, super money flow. So when it's just heavy sell pressure, it gets that red inside the red. And there's the same thing on the green. When it's super buy pressure, you get that green inside the green there. And then there's another one. So they have this kind of smooth out moving average line of the money flow. So when we start crossing below it, there's probably, first of all, it was over it, so it was heavy, but we're starting to come back underneath that line. So we're starting to kind of cool off a little bit, and you can see we did here. But obviously, when you're taking long positions, you want this money flow to be creeping up. When you're taking short positions, you want it to be creeping down. When you're in long positions, you want the momentum waves to be creeping up. When you're in shorts, you want it to be creeping down. And then these bull and bear divs are like suggestions or something to look out for, right? You can see in most cases they play out. There's a bear div, it pulled. We got that upswing that would have been a great entry, and it played out because the price came down. Same thing here. Now, there is a free indicator like this that you can use. It's VMC Cipher B plus divergences. Throw it on there. If you don't want to pay for the money, first of all, you need to invest in yourself, just like anything. But this is very, very similar. The blue is the momentum waves. The yellow is the VWAP. The red and the green is the money flow here. Here, let's zoom in for you guys, right? Red and green is the money flow, momentum waves. You get your Stokes. You get everything that you get on the oscillator matrix here. Just a little more busy than I like to have it. And it does show you divergences, but you can see here, it doesn't pull them as well. This hasn't been updated in forever. It still works. It's still a lagging indicator. It is still just like a reworking of the RSI, but as most indicators are. But this is a good free version for you. So it's just momentum. When you enter into a long, you want the momentum wave, the blue here, to be going up. When it starts pinching like this and the light blue touches this at the top, you see that red dot print, we're coming down. It's a good short opportunity, and it kind of coincides with the VWAP, with the money flow coming out as well. You can see they pretty much work the same way. So let me move this one down. And if you follow both with your eyes and this dotted line, you can see, the momentum waves going up. Money flows starting to kind of come up again, and we're going down. So they work pretty much the same way. I just think it's a little bit cleaner. On Lux, it's updated more often. They just had an update today. I have the lifetime membership to Market Cipher. I've had it for years now, and not once have they ever updated their indicators. Maybe it doesn't need an update, but it probably does, right? It's just a lagging indicator of RSI. It probably doesn't. But Lux Algo is always innovating. They're always putting out new indicators. They're always making our life better and easier. There is not a better suite of indicators out there than Lux Algo. I will fight you over this. And I will probably make more videos in the future about specific Lux Algo trading strategies, but they have a whole channel on this. You can do the same thing. Lux Algo Oscillator, right? There it is. Boom, Lux Algo. But they also have it on TradingView right there. Read about it. I mean, they have a whole video series on it. I don't think I need to make one because they already have this information out there for you. But read this stuff. Read all about the oscillator matrix. Read all about their price action concepts, right? And fair value gaps and break of structure. Lux Algo price action concepts, right? Here's all the documents on it right from their website and video series on it. And then trading views right up on it as well. Talks to you about break of structures. You got to read this stuff. You know, if you're going to wait for me to make a video on this stuff, you're going to be waiting a lot. I'm one person. I can't do it all. You got to put in the work. This is where you put in the work to read how to trade this stuff. Last one I'm going to show you guys. Type in divergence, RSI-VWAP favorite, throw it on there. Now, this is just a newer one that I found right here. So it'll help find you pivot points, bearish divergences, bullish divergences. It helps pull them for you. Now, there's times where you're trading, you got a lot going on. There's lots of indicators, lots of stuff to look at. It's nice to have an indicator that can pull these for you. So this is an RSI-VWAP divergence tool that can help spot pivot points, right? Pivoted here at the top, bearish divergence here that obviously played out. It pulled the bull div on this red candle before it happened, and that played out. Pivot point here obviously played out. Bullish divergence on this red candle obviously played out. Bullish divergence here obviously played out. It pulled this top, this pivot point here. Obviously that played out. So this is something new, something that I have just found within the last few days that I'm kind of liking. There might be some better ones out there that I'll look for. Otherwise, if you have some indicators that you want checked out, that you think would be good for me to at least look at, drop them down below or hop in Discord, discord.gg/Alpha Aere. If you like this kind of content or you want that alpha posted and seen every single day, because I'm posting it, babies. I'm posting it, and I'm posting alt plays that more often than not, guys, play out. But we got a small, tight-knit community. We are friends in here. That's what I'm going for. I actually talk to my community. I hold Sunday meet and greets where we kind of just chill for an hour and talk. I do live streams where I actually talk to you guys. You're not going to just be a number in Discord. Hop on in, give me a try. Discord.gg/Alpha Aere. I think that's it for the video. I just want to stress that you need to make your trading strategy your own. You should not copy me. You should not copy someone else. But if you are a price action concept or a smart money trader, which let's face it, most people should be, you should trade the top and the bottom of the ranges, order blocks, liquidity. You should be doing that. You should pull your liquidity levels like I do every morning from trading or from Bookmap, for example. You should pull your liquidation levels from wherever you pull those from. This is video like number 16 or 17 in our series. The playlist for this series is in the description below. Start at video number 1. If you made it to the end here, start at video number 1. Watch it through. There's a lot of good information in there. But I think that's it. I kind of want to just show you what I'm using currently. And this just changes from time to time. And I use other indicators from time to time as well. But this is the gist of it. And you know, more often than not, my charts when I'm trading, they're blank. They look like this. I'm just mapping out the top and the bottom of ranges, right? Here's a top. Here's bottom, here's top, trading those. When I'm drilling in, I need that extra help. I'm turning on these indicators to try to figure out which way the market's moving. The nice thing about this object tree over here, ladies and gentlemen, is this looks muddy. It looks disgusting, right? There's a lot going on. Just turn on the indicators you need, right? You don't have to have them all on. You want the CVD and order blocks on. You want to throw on the fib, throw them on, but use the object tree. It is there for you to use. I appreciate you guys. That's it. I'll be back for another video soon. If you have any suggestions, drop it down below or hop in Discord and let me know. Appreciate you guys. Later.